Good evening, everybody. Kind of warm weather for December. I was just telling Becky and Jim that usually this time of year it's cold and crappy. It's just warmer and crappy. 60 degrees here right now, and it should be probably about 35 degrees. All right, we've been concentrating on exact timing for entering trades, which was kind of oriented toward day traders getting into the right trade at the right time for a very quick trade, or a swing trader that wants to get in right at the appropriate time. Now, obviously, there's two great advantages for being able to identify the ultimate entry point. One, if you're getting in early, obviously, if it works, you're making very good profits. But on the other side, if it doesn't work, you're right back out very quickly because you can see that it didn't work with a very small loss. So this is all kind of a prelude to say on Saturday, we're going to be doing a full day training on entry. We're going to be looking at when do you enter the big price moves and very simple techniques of two logical steps. One, find out what was creating the price, and two, then you flip to your 10-minute chart to see when it's time to enter. So what we're going to be concentrating on is identifying the high probability trade setups, which is very easy when you're using candlestick analysis because we know that human nature works the same way time after time. So we can identify the high probability expectation after a pattern or a signal confirmation. And with this, when you add up very quickly what the market direction is doing, what the pre-market futures are doing, and then we're going to be concentrating on that. And this is all for either a one-day move for a day trade or good entries for swing trades. So the prerequisite for any good entry is, what is the market direction going to be doing? We can identify pretty much downtrends, uptrends, downtrends, or choppy markets. We can see when it's kind of coinciding with when one index is, they're kind of usually trade in conjunction. When one index is trading up while the other one's trading down, we can pretty well kind of get an assessment of whatever that trade is that we're looking at. Is it going to be more NASDAQ type stocks or with Dow type stocks? So that kind of pretty much narrows down, or at least improves the probabilities of being in the right trade at the right time. So the whole concept is we want to be in very fast and correct. Now, what have I done here? So because of the pattern setups, this allows us to anticipate good trade setups. And then if we identify with how the markets are opening, we've got that much more benefit of seeing what direction we want to be in, or do we want to get into that trade. Because obviously if we're looking at a bullish trade and the pre-market futures are showing the Dow is going to open up down 140 and the NASDAQ is going to open up down 30, yeah, we're not going to jump in on that that trade because things are going against us. If we can see where there's logical pattern setups, I mean, sandwich could be setting up, and it gives us that 2+2 analysis like Netflix last week, where when they opened it lower, we knew that we could be shorting this immediately, even if we were day trading it, because we factored that this day and this day are going to be about the same, and we have the doji rule that sets up a doji sandwich. The price is usually going to move in the direction of how they open after a doji. So these are all just simple analysis to tell us that the probabilities are greatly in our favor. We also have the benefit of seeing what a commodity is doing that might affect stocks. Today, we can see that gold pre-market was already trading positive. Silver was already trading positive. So that told us if we were seeing chart setups like this, where MAG opened positive after a hammer signal supporting here, gapping up, and it looked like it was gapping up right at the T-line, we knew that we had a much stronger probability that if we were getting into this trade, whether for a swing trade or a day trade, the probabilities are pretty strong that it was heading positive, just because that would be the reaction to the fact that the gold and silver prices were moving up dramatically. So using all this information, we've got much greater benefits for finding what the breakout indicators are telling us to be in a trade, again, with two advantages. One, you're in a good trade early, and two, if it didn't work, you're right back out because it's showing it's not confirming with a small loss. So your risk-reward factor is greatly improved. All right, so with that, I was going to try to give some examples for today, but today's market, as we saw, that's not what we want, did not have a very powerful conclusion to the knee-jerk reaction of yesterday. This all had very good prospects of giving us a J-hook pattern on the Dow because of the Morningstar signal right off the T-line and the 50. However, notice what the investor sentiment was by the end of the day. They were closing it lower than yesterday's close, but more importantly, below where they opened it. Bulls were not in control right now. The bears were in control. But what was even more observable was the fact that the NASDAQ, once it opened positive, it immediately started selling off. Not unusual, maybe some profit taking. So you don't really do anything aggressive until they got the profit taking over with and maybe came back up through the day's open. However, as we can see, now this is why yesterday in the afternoon comments I had mentioned that beware of the whipsaw type move, because it's not unusual to see a reactionary move, and then when everybody starts dissecting what that news was, which obviously was the Fed announcement, that probably the assessment by seeing what the charts were telling us was that this was the right thing for the Feds to do, was to get used to eating stick sandwiches. Yeah. This was the right thing to probably be doing, is starting to take interest rates higher. Then today was the rationale or the realization that if they're starting to take interest rates higher, that's going to be bad for the market. You add that to the fact that when they opened it and immediately traded it lower, and they did it kind of right there, that was pretty good evidence that obviously the bulls are not in this market yet. So what's the assumption? Right now you probably want to be predominantly short. We also had this indicator that we've been using, HYG, the corporate bonds, selling off That's also telling you there's less confidence in the bullish aspects of this market. So with that, I've got everything kind of mixed in here. We'd recommended VIR the other day because of this trajectory. I don't know what that is, but let's remove it. So you can see what was happening. There was a support coming back up to the 200, then they gapped it up, J-hook pattern. So now it did open more positive and traded lower. So right now we have a safety stop right here, because if they started trading back through this level, that means the sellers are still in control. And where are they if they come back down through here? They're back into this trading range that we are breaking out into new territory. So on the bullish side, we want to use the information that tells us there's a lot of strength in a trend. Notice the trend kicker signal right here at the 50, making that the reason for buying this one. And notice what it did today. Market's pretty soggy. This fry pan bottom trend is still working. Anytime you see a trend kicker signal, that tells you there's a lot of bullish sentiment in that trend. So even though this one, that's not the right one. Look what we had going on today. There's your kind of your J-hook pattern, almost a bobble breakout. Please explain the safety stop. Well, safety stop more than, which one were we looking at? Let me finish this and I'll go back to the safety stop. This one, even though it broke out today, kind of looked dismal. So if you bought today, what's our expectation? It needs to stay above the 50 and hopefully the T-line by tomorrow to tell us they're staying up above that breakout level. What would really be bullish is if you saw a gap up and do kind of a trend kicker, because that's what you would expect in this type of pattern setup. If they did a trend kicker, that's kind of confirming that this bullish pattern is working. Was it this one that we were talking about, the safety stop? Or was it? Oh, safety stop. All right. So what did today's price movement tell us? Even though it was up, it was back below where it opened. Now, just simple logic says if they opened it here and started trading at positive, who was in control? When they came back down through the open, which is where it told you the bulls were in control, what was it telling you? The bears are starting to take control. Now, it didn't do anything that would indicate that the bears were really in control, because we're still in this J-hook pattern. But if we put our safety stop, that means we put a stop right here, because logic will tell us that if they have enough selling strength to bring it back down through this level, you want to stop out. That's where you should be coming out. Now, this is much different than what most people are advised, that you should set your stop 3%, 5%, 7% below where you got in or below a certain level. The market doesn't give a hoot where you bought, number one. Number two, a stock price can move back a certain percentage, but as long as it doesn't show that the sellers are in control, you stay long. So, Murray, does that explain a safety stop? Safety stop is just putting a stop someplace where it shouldn't be trading if it's confirming that, or not confirming that we're still in an uptrend. So kind of the same scenario here. Whoops. We have kind of a double bullish flutter kicker signal that broke out through the 50. Rachel, are you just trying to practicing spelling your name? Well, what type of signal do we have? Kind of a shooting star signal. We're not quite in the overbought area. We're not anywhere close yet to the overbought area. But where would you not want to see this trade after a shooting star signal? One, probably right here. But if it opened lower and started trading lower after a shooting star, where do you think they're taking it back to? They're likely taking it back to the T-line, which would probably be up here tomorrow. Or a little bit more aggressive or conservative, I guess, would be you put a safety stop at this close, because logic says if it opens lower and comes down through there, that's good confirmation that they're selling. So that was, we had questions earlier today of should we be getting out of this one? And we didn't know until either right here or at the end of the day. Because now what do we have in the overbought condition? Golfing signal that closed just below the T-line. What's that say about our probabilities? Telling us we're up here in the overbought area. We started to see some selling, and then we saw a definite candlestick sell signal close out the position, because things aren't looking good in River City anymore. For the long-term investor, you can see what's happening here on Ford Motor Company. Whoops. Even though it's not moving up with any great velocity, you're starting to get this trajectory. What's that trajectory tell us? Sentiment here. Where would I be buying? Again, we've been recommending this, or we've been accumulating this in long-term accounts now for a couple years. They were starting around, I think, 675 a couple years ago. And it's become more active because of their product mix that they're now creating. Recently announced that their, I guess it was on this day, that their F-150 electric trucks are stopped taking orders because they've got so many orders they can't keep up with demand. David, an bearish engulfing signal is a candlestick signal that completely engulfs the previous day's body. Doesn't necessarily have to be the shadows. Remember the two important factors of the Japanese rice traders analysis. Where did it open and where did it close? Those are the most important decisions that create a candlestick signal. The shadows are just merely the trading range during the day. Starting wave 3, not yet. I would still not go after wave 3 until it comes up through that level. And when it does, I think there's about an 8-point move, which could take you up into the $29, $30 area. Tom, I don't take a look. No, it's not parabolic. It's actually been using the T-line as a support. So that move right there is still telling us they've had a few weeks of consolidation, and now there's buying started. So no, I wouldn't even look at the weekly chart. Whoops. On a daily basis. Yeah, it's after that parabolic move, it's had good congestion. Go back to 2020. No. What's 2020 tell us? Not anything that's going on right here in this move. We're not buying from 4 months ago, 8 months, 12 months, 4 years ago. We're watching to see what the investor sentiment is right now. All right, so we also can identify which sectors are not acting well. So we knew that the airlines were trading in a downtrend, except it looked like they might be basing here. But notice what happened today, and this is not something to conclude that when they gapped it up, it was anything dramatic. What we do want to analyze is the fact that it couldn't hold and traded down. What did that tell us about our existing chart? That bearish J-hook pattern is still likely in progress. Same thing with United. Notice they gapped it up right at the T-line and took it lower. That is information that we can immediately process to say there's no bullish pressure in these stocks. They're still heading lower. And I haven't even looked at the cruise lines. Cruise lines, you could be shorting CLL, RCL. I say CLL, CCL. These all could be shorted. And I always goof this one up. And CHL. I goof that up all the time. I'd recommended going short because what is the power sell signal here? All right, thanks, Kelly. I'll get back to it. There's your bearish best friend, gap down through the T-line. And now notice what the T-line told us today. They took it right back up to the T-line and then sold it off. Now on their chart. So when it comes up and hits this level, we know that it acts like a natural support and resistance level of human nature. So the fact that it came right up and hit that and started trading off told us that that was the natural resistance level that you can still be short on this one. So here's Norwegian, wave 2 going into wave 3, and notice how the T-line was a major factor. Someone said it was all of the it was all in the what? Oh, for some reason it's not coming up over here. Or is it? For some reason that's not coming up over here. Okay. Now, what do we expect at a breakout level? We expect it to break out. So what happened? Started to break out. So if I had been a buyer of this one today, as it was trading up, I would have closed it out as soon as it came back down into this trading range. Because what should it have been doing? Should have been going in this direction. Now look what you have. You had a fry pan bottom potential breakout, now followed by a big bearish engulfing signal sentiment. Not only was this not a breakout, but now it becomes a double top. Look for some more selling. Investor sentiment changed dramatically today. And run another one that would have, if you were short, would have been getting pretty ready to cover this had it opened and started the next resistance level was going to be. Back up here to test the T-line. But they opened it, then started trading it lower. So what's that tell us? Wave 1, Wave 2, Wave 3 is still in progress. So these are just high probability results, just seeing what the patterns are. You can see what happened here on Amazon. Big reversal, but notice what the signal was yesterday. Oops, that is a green candle. I was going to say it wasn't really a signal. However, it did pretty much tell us they used the 200 as support. Maybe they were taking it up. But then this is why I was warning everybody, be careful of the whipsaw, because prior to the whipsaw move, so what do you have to be careful of? That as soon as that whipsaw moves over, the existing trend goes back in progress. My audio is breaking up. I'm probably just me stuttering every now and then. Anybody else having breakup problems? All right, BC, you might want to log off and then log right back on, get a little bit better connection. Okay. Apple, same scenario. Yesterday, this looked like if it had opened positive, we were still in an uptrend. The fact that they brought it back down here, what does that tell us? Well, we had a dark cloud over here. It tried to come back up. Now we have a bearish engulfing that closed below the T-line. What's that tell you about the bulls and the bears? Up here in the overbought area, the bears are obviously winning. So where do you think this could pull back to? Could be here. It looks like there's a wee little teeny gap right there. It could be here. Or where else could everybody be watching to see if it's going to support? Or where it's going to support? You know, you can put your Fibonacci retracement numbers on just to see what the Fibonacci retracement people are watching. Here, here, or here. So it's not like it's going to come here, or it's going to come here, or here, here, or here. We just have the ability to see if it does pull back, and we start seeing a buy signal at one of these levels, we got better confirmation that that was the level they were starting to buy. Would you have sold Apple even before? Yes, I did. When it came back down through this level, I closed out calls and I started buying puts. Because as long as they were doing a bearish engulfing signal, that was pretty much telling us dark cloud, bearish engulfing, stochastics heading lower, probably going to be some profit taking going on. Netflix, here was a good indication the bulls weren't there. Notice where they opened this one today. Below yesterday's open. If this was an uptrend or reversal, we should have seen it open positive and trade positive. When they were gapping it back down, that was even with the Dow opening up pretty strong, that was a good indication that they weren't, that was just a bounce yesterday. And NVIDIA opened positive. And where did it open positive? Whoops. I'm not going to do this real quick. Oh, I could have done a better job. But pretty much right there at the downtrend. So, is this a good short? Don't know yet. Got to contend with the 50. If they opened this lower, or even gapped it down, yes, that's when it becomes a good short. So anytime you see a sell signal, you definitely want to see that confirmation. So the home builders were acting very well until they gapped it up and then did a bearish engulfing signal. Well, they could have supported at the T-line. However, the next day they gapped it down and traded below. What's that telling us in that sector? And Tesla opened right on the T-line and continued the downtrend. So what does all this information tell us? I don't know how that got on there. That tells us that overall, this downtrend is still working. Does that mean every stock's going down? No, but it's still kind of giving us the impression that bearish sentiment has now come into this market. So there isn't a whole lot that we're showing good bullish charts. Whoops. Here is one where they actually did a gap up through the resistance levels. That one you want to watch for a 45 degree. Cons had a good chart yesterday, but notice what it did today. Did not confirm. So what would that tell us if they open this lower? So I know there's people out there that probably bought some of these going into the close yesterday because it looked like there was lots of bullish sentiment because of what the Feds announced. But that's why I put in the YouTube today that in my 40-some-odd years of investing, I've discovered it's not unusual to see a big move based upon an announcement, especially from the Feds, and they take everything up strong, then the next day they slam it right back down again. So that's why you always want to see confirmation that the bulls are still in or maintaining control. This is the bearish fund. You can see there's kind of a bobble breakout setup on TAZ, which tells us if the market heads lower, you could be buying this one. And I haven't even looked at the Russell. The Russell was bad also. To the point where if it comes down through this level, you got a wave 1, wave 2, wave 3 still moving. Oh, hold on. Yep. So if you had bought AMD yesterday saying, oh man, everything's great, you would have closed it out today for two reasons. One, if this is the candle that told you the bulls are in control, if they could close it more than the candle, who's in control? The bears are in control. That's the simple logic of the Japanese rice traders. number one. Number two, not only did it close more than halfway down this candle, but it closed back below the T line. And the one thing you always want to keep in mind is if you're closing below the T line, the probabilities are extremely strong that you're heading in, that you're still in a downtrend. On con, you said if it opens lower, then the downtrend is still in effect. Does that hold true for all charts that look? Yes. So anything that was in a downtrend that popped up because of yesterday's announcement, and they closed it back below the T line, I told you that was just a reactionary bounce. Now the true investor sentiment is becoming obvious. Now OGN is a good chart because look at doji, 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 basing, and now they've gapped up. Where was your first likely target from this point? Probably coming back up to the 50. Yeah, let's see. I'll skip over to some of those. The yesterday, right now, U.S. Steel has based, but it's not showing any real resiliency. And they took it up and then brought it back down. And you had some other ones like Nucor that had a big kicker signal to the downside, now bringing it back up. But here's the one other assessment that you have to analyze when you're looking at your patterns or your signals. What's the trend doing? Right now, I wouldn't touch this one because of this, because you can't, yeah, it's not going anywhere. Find better places to have your money. Yeah, there's always going to be some charts that are going to be trading. Again, another advantage of candlestick analysis is that you can do a very simple scan and find the 3, 5, 10, 15 stocks that are trading positive even though the market might be heading down. Or conversely, if the market's heading up, you're always going to be able to find 3, 5, 10 good short positions. All right. Let's see. Doesn't it seem like we have stick sandwiches for a while? No, stick sandwich is a big up day, a big down day. Which ones were we looking at? A stick sandwich needs a third day. That third day needs to be a big green candle coming back up so that you have a big green candle, a red candle, big green candle, so that red candle is sandwiched in between, and that's your stick sandwich a pattern. Ford is a little fry pan bottom, yes. Hold on to your individual stocks until I tell Jim to do the double line. I meant generally in the wider market, just swinging up and down, alternated. Don't expect a breakout or breakdown. Pretty much, yes. That means we're moving sideways. Con, filling the gap. Filling the gap. Oh, meaning this gap? Not necessarily. Yeah, that wouldn't be filling the gap. That would be more just continuing the downtrend. And AQST, that has a little bit better potential because you had kind of a left-right combo gap up through the T-line. So if this opens positive, where's your next likely target? Somewhere up in this range. All right, so I was going to illustrate that one of your high profit day trade setups is a bobble breakout. And that's merely a J-hook pattern that has a definite resistance level that now is being breached. So here is a perfect example that if I was buying this one today on the bobble breakout, as soon as it came back down through the open, who was in control? Well, you can see the bears were in control. That's where you would have stopped out. So if I bought right here and it went up and then it came back down through the open, all right, so I took a 15-cent loss. That's what I'm trying to do. I want my losses to be extremely strong. I want my bullish trades to be extremely big. Alex was another good bobble breakout setup, except you can see that it didn't break out. So this is why you always want to wait for confirmation. Shorty short the Russell sort of bobble breakout. Okay, let's take. Yes, I think we looked at another one that looked almost like that. But again, that's now you're expecting or anticipating that the markets trade lower tomorrow. So here's T-Mobile. Not quite a bobble breakout, but a J-hook pattern, which the reason that we want to see what happens at these resistance levels is that we can see the pattern set up, but most people are watching to see what it's doing at that resistance level. So we could be buying right here, knowing that it's probably going higher, whereas everybody's waiting to see if it's going to go higher, and they start coming in much later. That just gives us a little bit of a running start to get in before everybody else. Now, here is the benefit of being able to analyze what any of the commodities are doing. You can see what happened in gold today. You can see what happened in silver. A kicker type signal to the upside, which told us that if these stocks were opening positive, you could be buying them, because if you can see, and you're going to be able to see probably before the market opens, what gold and silver were doing, or if you're trading the oils, what crude oil is doing. It just gives you a little bit of a running start to say, all right, gold is trading positive. If this starts trading positive, we can start getting in early. Pause. Did we do that one already? Sand, another one that did a best friend signal. And mag did kind of your hammer gap up. Where's your first likely target? There's the gap right here, which means they could probably take you to the 50. So these are the things. It doesn't take a matter of 15 seconds to type in to see what gold is doing, what silver is doing, and then go to some of the oil or the gold and silver stocks and see how they're opening. That way you're prepared immediately as soon as the market opens. If I was watching this one today and I saw gold and silver trading up, I'd probably be buying right about in here because it gapped up. I expect it with it gapping up that it's going to trade higher. Now, here's another simple visual that we're going to be analyzing on Saturday. When it opened up and started doing this on your, let's see, got the 15-minute, we want the 10-minute. Opened up, you can see it was doing this, doing this. You could be buying here, buying here, buying here. Might not be buying here. Want to see what it was going to do at the yep, could be buying here, and then what was it telling you? You could, if you were even day trading this, you'd stay long until right about there. Would you get back in? Yeah, get back in right about there. So if you know what the daily chart is telling you, then you can use the 10-minute chart dramatically to your advantage. NVAX. You can see the J-hook pattern that's supported right here on the 50. TUFN. You can see the fry pan bottom. Now here's another high probability result. That if they come down and they use the T-line exactly at the T-line as support, that tells you they're not coming down through that level, but they're still trading positive. Z-Lab, that's a kicker type signal. Up through the T-line. You could be buying this one on positive trading because a positive trading would tell you your kicker signal is working, your T-line's not acting as resistance, and it's breaking this downtrend. And you can see purple. Now, if I see a big move like this, I might even buy this tomorrow, but I'm going to go back and see what the news was that created that big move. Now, if this was an upgrade, that doesn't mean anything. That's just a temporary change of supply and demand. If this was that something happened that was going to affect their long term, yeah, you can start buying this one based upon that news and the confirmation that a buy signal was put in place. ISIG, observe the obvious. Inverted hammer, bullish confirmation, and where did they do it? Right smack dab off the T-line. Oh, it was upgraded? All right. So that probably has less relevance as far as longer term upside. It might have a little bit of upside, but I would be less aggressive about going after something. Now, if they had said that they got a new huge contract with somebody, yeah, that's more relevant. Oh. Here's another one that's setting up very nicely. Now again, the 34 acts as a relevant support and resistance level. So where would you think your next target would be? Probably coming back up into this trend. And ITOS, you can see the doji gap up through this resistance level. Look at your left-right combo. Look at your inverted hammer, your fry pan bottom. That's a pretty good implication. Oh, that there's probably going to be, well, Shazam. Wave 1, wave 2, you're in wave 3 that broke out through this level. Okay, now on the short side, notice what they did when they gapped up. They could not get through the T-line. Now look what you got. You got a kind of a bearish flutter kicker. You definitely can be shorting this one on weakness tomorrow because of that bearish flutter kicker signal. Playboy, You can see kind of the rolling over. You could probably still be shorting this one. DOCS. If you were short, you could stay short if you happen to stay short. I should probably go to more of this one, DOCN. Now that's probably more relevant. That's wave 1, wave 2, and look where they failed. Right smack dab at the 50 with a bearish left-right combo. Now you got another bearish signal that failed right on the T line. You can still be shorting this one. LC, if this is wave 1, this is wave 2, this is wave 3, but look where you're sitting, right smack dab on the 200. Now where do you think everybody is watching? They're watching to see what happens here at the 200. If they open this lower, now you can have more confidence that wave 3 is going to be the same magnitude. All right. So I would be less, with that news, I would probably be less anxious to go after something that doesn't have anything that's kind of confirming that strong up move. So this one's a good short, because if they've taken it up and then all of a sudden they've slammed it back down, that now becomes like an evening star signal with a booster to it. All right. What is today? Today's Thursday. And CALX. Wave 1, wave 2, wave 3 is in progress. Wayfair. Look where this one failed, right at the 200. Bearish doji sandwich. Bullish flutter kicker signal. If I was short, I would have covered it on this day. But then you could always start shorting it back when it came down through this level, because what did it tell you on that day? It told you not only did they fail the T-line, but they're coming back down through the candle that told you the bulls are taking control. You're probably in wave 1, wave 2, into wave 3. Hutu. Let's make this bigger. Wave 1, wave 2. Look at where wave 2 ended, with your shooting star and then your failure back below the T-line. And then notice how every time they took it up to the T-line, they failed. I would be shorting this one on the basis that wave 1 and wave 3, especially if it breaks out through, say, that level, that you've got a lot more downside. Anytime you see that big sell signal, that tells you there's probably a lot of force to the downside. Another wave 1, wave 2, wave 3 in progress. Myra, you're sitting right here at a support level. You're still in a downtrend. And Riot bounced up, but now negated any of this buying. This one could still be shorted on weakness. So right now with this market kind of telling us that they did the right thing, but the right thing was going to create the markets heading lower. So you can see where that selling took control again, especially here in the NASDAQ. So I would think there's still more downside. And there's a couple factors that give you that impression. One, the markets itself, and two, if you've simplified your scans. And my simple scans are which stocks had the biggest percent price move up or down today. Well, if I'm finding 4 times more good short positions than I am long positions, that's another indication that there isn't a lot of bullish sentiment out there creating a lot of good bullish signals, whereas the bearish sentiment is creating a lot of bearish sentiment or bearish signals. That just logically says that the selling pressure is probably much greater right now. All right, so with that, the one thing that the entry strategies that we're going to be going through this Saturday is that it keeps you from getting into trades that aren't working, number one, and it also allows you to get into trades that have high probabilities of producing good profits, but it gets you in early enough that if the trades don't work, you're right back out with a small loss, so you can take that money and go find another trade. So everything that we analyze in a candlestick chart is just what are the probability factors based upon what should happen after a candlestick buy signal or sell signal or bullish breakout pattern or bearish breakout pattern. If we know what those probabilities are of what should happen, that just gives us a huge advantage of being in at the right time for big price moves and being back out immediately on price moves that didn't work. Now, hopefully the probability factor is the big price moves are going to be much stronger prospects just because of the fact that they are pattern or signal confirmations, and that we know which way they should be going, and we also know which way they shouldn't be going and close that trade very quickly. So anyways, mark your calendar. It's going to be a cold, dreary day, and you'll have much more fun finding out where the best entries are. DE, I shorted it towards the end of day yesterday because of bear doji sandwich. Less than 50 and did not trade up despite Powell's comment, causing other stocks to turn bullish. Would you have waited a day instead to decide on shorting? Probably not. If I was shorting it yesterday, I would have felt comfortable staying short. Now, the fact that they didn't close up above the T-line, number one, and number two, closed below where they opened, that would still give me the impression that we're in a downtrend. So this would just be one of those situations where, yeah, you could have shorted at a better time frame or waited, but I probably would have stayed short if I'd shorted it. Now, did you short down here and came up a little bit? I still wouldn't be worried. Now, it's not a great looking chart because it's pretty junky. So you definitely now have to see it trade lower. Do you put in a stop loss as soon as you buy the stock? The markets move so fast. Not really, because I'm usually sitting here all day, Lou. But let's see if I can think of one. But if I was long here and it was trading up, I might have just put a stop or a mental stop right here. Now, if I was going to go off and play golf or go have a long lunch, yes, if it was trading up here, I would have just put a safety stop at some place where it shouldn't be trading. So, no, I don't do it as soon as I put the trade on. And sometimes they open up and they waffle around a little bit and then they move. It's when I see that they aren't doing what they're supposed to. All right. Any other general questions on candlesticks? I love all options expiration and quad witching, especially. Do you play lotto or do you teach a class about option expiration? Oh yeah, we do option sessions in the members area, usually on a Tuesday night or Wednesday night, or if it's a long session, we do it as a mini spotlight training on a Saturday. But the expiration is based upon your risk-reward factor. So we've got some people in the options room that if they think the market is definitely moving in a specific direction, and they see, and Nora is great at that, they see an option that is right near expiration or right near a strike price, they might pick up an option for 20 cents, and then by the end of the day or going right into expiration day, she'll come out of things at $1.25, where she's made 5 times her money. So, but that all boils down to what is your trade risk-reward factor. Yes, you can put stops on options, or at least I know you can do it in Thinkorswim. How do you figure your wave 1, wave 2, 3? Just very visual. If this was wave 1, this would be wave 2, and then if they took it back up, that would be wave 3. Now, I don't use, it's not like Elliott wave where you have wave 1, 2, 3, 4, 5 with an ABC retracement. No, I'm just looking at that prices move in patterns. If this is wave 1, this is wave 2, breaks out, that's wave 3. How long do we hang on to wave 3? Until we see a sell signal and a close below the T line. All right. Thank you, Bruce. Okay, I guess with that, Jim, let's go ahead and do the double line. And in 2.8 seconds, do the next double line. Netflix, do you see it go to the 200? It could, yes. That would be approximately wave 1 and wave 3. So that would be my expected target. Now, does it always get to the expected target? Definitely not, because what's the most important factor? Being a buy signal. Yes, probably too late. You could have been buying here, or you could have been buying here. Let's make this a little bit smaller. This is now, you'd be looking at the fact that you're in the overbought area and move that far away from the T line. You'd probably be more apt to be looking to start taking profits up here on any sell signals. Blue, it's supposed to be a 45 degree. It's holding up well, but now I'd put a safety stop down here, because if it started coming back through this direction, that means they're coming back to the T line. You want to be out of that trade. So that's a long answer to say it needs to trade positive from here to stay in it. C change, same scenario. You stay long looking for that 45 degree. And Alcoa broke out. You stay long. I'd put a safety stop at, if I was long at the close of yesterday, because if they have enough selling pressure to bring them back down through here, it's not going anywhere. QDEL, stay long. Use today's low as your stop. It shouldn't come back through that level. Fulgent, you can stay long on this one. Also, just put a safety stop at today's low. We did NVAX. Stay long on this one. Let's get rid of this. Whoops. Snowflake. Well, I'd be more apt to go short at this point. Yes. Fastenal. Stay long, but have your safety stop below the T line. And BGS, you could be going short on this one. I think we did in the video a couple of times already. You can go short, especially if this one goes down through the 50. ANET, that one you want to close, should have closed out today. Now you see about going short, especially if they open this one lower. That's your bearish engulfing. Same scenario here. You had a bearish harami. They tried to take it back up, do another sell signal, a bearish engulfing, getting up here toward the overbought area. That's a pretty good indication the bears are starting to take control. Stay long on app. ZTS, just stay long as you stay above the T line. C3, RAM, I don't know what that is. Blue, that's kind of a nothing chart. Probably wouldn't be long or short. Just no direction. QTNT, you can be buying this one. It's not anything fantastic, but you do have a hammer harami gap up. Just watch to see what happens once it gets here to that major resistance level of the 50. See, Citigroup, nothing yet. Now, if I'd been short, I would have covered the short today, but I wouldn't be going long. So right now, I wouldn't be long or short. Gold, we said pop back up. Pfizer, stay long on this J-hook pattern. Do you gauge how long it will take to get to the 200 on Netflix? No. No, I would just assume that's what everybody else is looking for. It could do it in one day. It could take another week. Just that, as long as you don't see a buy signal, that's the likely target. Ford we did. Ford has got this little slow curve. Wave 1, wave 2. I'd be a buyer of this one, but I'd probably be more active buyer above that level. Etsy, if you happen to stay short, stay short. The Qs, if this opens lower tomorrow, telling you the 50 is not acting as a support level anymore. This one, I would not be long or short. There's absolutely nothing there to make me want to be in that chart. BGS. That's kind of a fry pan bottom. Did I do something else? I'd be a buyer of this one on positive trading tomorrow. Taiwan, that's a nothing chart. Just no direction. Helix, you could buy this one on positive trading with a bullish doji sandwich, yes. And SSRM. That's a nice reversal, right smack dab off the 50. You could buy this one on positive trading. That's that one of the silver mining. Yeah, so that's got a good looking chart. McDonald's. Just stay long. You can see how the T-line acted as support. All right, so ones I kind of put stars next to. This one still looks like it's got the prospect of some good upside. ITOS. I'd be thinking about shorting pod, starting in wave 3 to the downside. Okay, guess that's about all we got for tonight. We'll see everybody bright. Oh, Becky, can you put the Saturday link in one more time? Somebody was requesting it.